Hi, everyone, and welcome back to another episode of Behind the Sold Sign podcast with your hosts, Justin, Sonia, and my colleague,
Sheila Kirkpatrick.
And today we are going to get into the market stats. We're going to review the April stats, which we had already covered.
Yes.
But we're going to compare them to the month of May stats that just came out from the board.
Right, which is really exciting because the question is, our numbers have been climbing. Mm-hmm. So with this, is it going to be another month of increased sales prices?
Right.
Or have we leveled off?
To be continued.
That's right. In just a minute.
And then after that, we'll kind of talk about the interest rates because the Bank of Canada last week did have their announcement.
Yeah.
So we can review that, kind of let people know how or if it impacts them.
Right.
And what that will look like continuing on for the summer months.
And moving forward and kind of some of the things of, you know, what some of the economists are saying out there and the projection of things. So
yeah, absolutely.
Yeah.
All right. Let's take it away.
All right. So let's talk about the average sales price, because I feel like that's where the public relates the most to anything, is what are the average sales prices.
Yeah.
So we knew April had a huge number, which was $338,493. So that number has increased substantially over the course of the year. We're looking over $35,000 since the beginning of the year.
Yeah.
And so the big question was, what was going to happen in May? So why don't you give that to them?
Well, May, we are still seeing the climb. So the average sales price for the month of May was $340,611.
I'm not shocked, but you do have to kind of ask yourself, when is it going to level out? And so that was another approximately $2,000 that we've increased. And that also drives up our year-to-date pricing. So year-to-date, last month's numbers came in at $321,433.
And for year-to-date for the month of May, we're sitting at $327,264.
Which is a huge number, because I felt like for so long we were hovering at that 300,000 range. And now we're so far past that. Like, I feel like that 300 range was a number we've been talking about for a year or two.
Yeah, no, I totally agree with that.
Yeah.
And now, like you said, we're beyond that.
Yeah.
Which is crazy.
It's wonderful for sellers, and for buyers, again, we just need to reiterate, get into the market as quickly as you can.
Yeah, no, totally. And this was a valid point too that we, as we're reviewing the data, discovered. So new listings for the month of April were 287, which is a 34.7% increase when you look at April of 2023.
Right.
And then when you look at new listings for the month of May, we are sitting at 329, which is a 17.9% increase compared to May of 2023. So you would think, because we're seeing more inventory,
right,
it should or would be balancing out the market, but that's not what's happening when we're reviewing the average sales price.
No. So natural economics would tell us that the number of buyers have increased. So the number of sales are increasing, the number of buyers are increasing, and as much as you would think that would start to level the playing field a bit, it's not happening at all.
It's not happening.
There are lots of reasons why this effect is taking place, but we do have a lot of immigration coming to the country. And again, everything will always come down to supply and demand. So our new construction, if we could be getting more properties put out into the market, and if you had people that were downsizing, looking to go to apartments to free up homes, that would give some relief here. But we need to be creating a lot more new construction, even if it's for apartments. We need to be creating housing construction. And again, immigration, that's not something we can control.
Right.
But I think it's a huge factor.
Yeah. So moral of the story is, even though we're getting more listings on the market, we're still in a housing shortage, and it's not enough to counteract the immigration or the people who still don't have a place to live.
Yeah.
There's just too many of them. So.
Yeah. But some of the other numbers that, again, can be interesting to the average consumer would be our list to sales price. So our list to sales price is, again, over asking price at 106.4% of the asking price. And that same number for year to date period, because you can have numbers fluctuate quite a bit from month to month, but our year to date number for that is 104.7. So again, that is your list to sale. So they're all selling over asking price on average. And then your median days on market are 22 for the month of May and 23 for year to date numbers.
Which is a quick turnaround. Like
a very, very quick turnaround.
Yeah, that means homes are moving quickly. They're getting the accepted offer. They're fulfilling the conditions, and it's taking approximately 23 days to do so.
23 days to do so. Think about that. Think about another house that maybe is not selling, and it's been on market for 100 days, and this is still the number that we're looking at.
Right. Yeah.
So things are flying off the shelf. Market is very competitive. Sellers are still getting great numbers for their house.
Yeah.
They do have to think about if they're moving somewhere else. But you know what? If you are thinking about downsizing, if you're thinking about cashing out, well,
It's the perfect time.
things are great for that.
All right, so now we're going to get into the mortgage rates because the Bank of Canada had their announcement on June 5th, and we're just going to talk about who it impacts, what that looks like for the market, and how we expect it to kind of unfold going forward through the summer months.
Yeah. So announcement, 25 basis points.
Yeah.
Yeah. So 25 basis points. What does that mean for the average person? So let's not talk about the type of mortgage yet. Just 25 basis points and how a reduction can affect your mortgage. Per 100,000, you're looking at about $15 or $16 a month. So if you have a variable mortgage, then you will see that savings right away. If you're in a fixed mortgage, you're not going to see any savings right now. But that's okay because you have a lower rate than anyone in a variable mortgage right now.
Yes, true.
Yeah. So the next part of that, though, is what that means from an economical standpoint. Where we're at right now is that this is the first of hopefully many changes in the prime lending rate. We haven't had any reductions since
March 2020.
Right.
So 4 years.
Over 4 years, we haven't seen any change to that. What economists are projecting is that things are going to decrease 1% to 1.5% over the next year or two.
Which would be a big deal.
It would be a huge deal because the biggest thing people are worried about right now, or the average consumer, is how much is my mortgage going up when I renew? And although we didn't see a huge savings right now, we couldn't have asked for anything better than having a savings.
Agreed. Yes.
It could have stayed put. It could have gone up.
Could have gone up.
But the reality is it went down. So that was the best scenario that we could be in. So I'm not going to complain about any reduction.
Me either. I will take the reduction of 25 basis points. Thank you very much.
Yes. And what I love about that, I think it's a domino effect. And it's just the start of where economists are saying we're going.
Yep.
So it's nice to see that that's actually taking place.
Absolutely.
And some of the other factors for the general consumer is, there could be a HELOC mortgage. So a HELOC would be home equity line of credit, and that would be the line of credit portion of your mortgage. So there's a mortgage portion, line of credit. As you pay your mortgage down, the line of credit goes up. Well, if you have anything on that line of credit, you will see savings by this rate change.
Yeah.
If you're in a variable mortgage, you will see change based on the rate change. Anything that is going to be based on a variable, and any new loans coming out,
You will see the benefit.
That's right.
Yeah.
Yeah. So the average consumer, or anyone who's getting loans right now, should see a difference, and this will help us moving forward.
So fingers crossed that the economists are correct and we do see that rate drop, whether it's a percentage and a half, doesn't matter. Let's just work that way. And
I think one of the things that's really important with this, where the economists are projecting things to go, is that this might stimulate the buying market more. And we've already talked about all the numbers previous to the interest rate conversation. So is that going to drive more people into the market, which again is going to drive the pricing up more? And I hate to sound like a broken record, but I feel like each podcast we're having these conversations and trying to tell people to buy, but it's because of everything that we're seeing. There's not once here have we seen something that's us giving bad advice based on everything that we're seeing in the market. So
Agreed.
guys, I don't think we could be any more. We've given the facts, we're giving the information. We want you to have the most up-to-date information to make informed decisions in this crazy real estate market.
Yeah. And again, just looking into the future so you can kind of know what the economists are saying they're predicting, so you can see where it's going and just better prepare for when you are ready to either buy, sell, or invest in the market.
Yeah.
So thank you guys so much for watching. We hope you learned something new. If you have any questions, please let us know, and please feel free to like, share, subscribe.
All right.
Thank you.
See you later.